Hi, welcome to another Learn, Grow, Invest meeting. It is very good to be with you again. If it's your first time here, I'm Jermaine. I'm co-founder of this community. And today we're actually going to be going through a stock review and analysis for Mailpac Group Limited. So, if it's your very first time here, you may not know who we are. So we are the Learn, Grow, Invest community. We cover financial education and literacy. We do videos, just like this one. We cover all types and ranges of investment topics just to help you become a better investor. Our foundation, our core, is Deuteronomy 8:18, which says, "Remember the Lord your God, for it is He who gives you the ability to produce wealth." And we acknowledge God as the one who has given us the ability to do what we're doing here. So we're going to take a moment and honor God. Lord, we thank you for this day. We thank you for this community. We pray that you'll bless us with wisdom and understanding. In Jesus' name, amen. All right, so feel free to connect with us on social media. Subscribe to the channel if it's your first time here. And let's just jump right into this. So before I go, I have to say this, that the information that we're going to share here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any securities on any stock exchange, including Mailpac. All right, so the format that we're going to take today, we're going to look at Mailpac's business model. We're going to try and understand a little bit about what they do, and that's the first step in analyzing any company. Before you buy or shortlist a company, you want to know what they do. You want to know how they make money. You want to know the different lines of revenue that they have. So that's very important. Next, we're going to be looking at the annual reports, just the highlights, the key notes from it. Then we're going to look at the quarterly financials. The 6 months were released recently, so we're going to contrast that with their performance last year. We're going to look at the price history on the Jamaica Stock Exchange website, and then we're going to look at some news stories that I found that I thought were interesting, and then I'll share my analysis at the end. So let's just get right into it. So the very first thing we're going to start with, which I think is extremely important, is to understand what Mailpac does, right? Who they are, what's their mission and their vision, right? So it says here that their vision is to be the Caribbean's most customer-centric company, connecting consumers to a global array of goods and services. And that's how most of us know Mailpac, right? And their mission is strive to better the communities they serve by enabling seamless access to goods, services, and opportunities that enhance the lives of their shareholders, customers, and employees. And we like to look at what a company's vision and mission is to understand where their focus is, what they're about, the things that matter to them. So that's very important, and we like to start there. So in terms of the history of this company, most of us know Mailpac as simply, a company that you can ship your goods from one country to Jamaica. But this is really speaking to the history of the company. So they would have been, so Mailpac Group Limited is separate from Mailpac Services, which would have been founded in 1998. So Mailpac Group Limited is the company that we are reviewing here today, and they were incorporated September 19th, 2019, to acquire the businesses of Mailpac Services Limited and Mailpac Local Limited. We'll talk about those a little bit soon, for the purposes of bringing together both platforms into one business. So they acquired both businesses in September 2019, and then they would have listed later on that year on the Jamaica Stock Exchange. So in terms of their services, and what we're going to do here, actually skipped ahead. So I'm going to speak to the services that they do. So there are like 3 or 4 key services that I'm going to highlight. The first of which, most persons would know them for this. That's mailpac.com. That's where you can order goods online and ship it through Mailpac. So they're saying here they have over 50,000 customers and companies in Jamaica. And that's their core business, right? So that's where they would make most of their money. That's their bread and butter. But it's good to understand not just this business, but all the others as well. All right, so let me just carry up some notes here. Just give me a second. All right, so as I was saying, so this is their core business, and what it does, it provides their clients with a physical address in Miami where they can receive goods purchased through any international company, most likely, places like Amazon, eBay, Best Buy, and all those other companies. And those goods go to their warehouse that's in Miami, and then it's shipped to Jamaica. It's shipped through, well, the warehouse is operated by Aeropost, and if you actually go to the Mailpac website, you will see the Aeropost logo there. So that's their core business, as I said. And in 2017, Aeropost was acquired by PriceSmart. Everybody knows PriceSmart, and so that's kind of the development of that main business. In terms of some of the key things to note about this particular service, you get instant and guaranteed landed prices, including duty through a patented pricing tool. It's fully integrated with leading couriers for immediate package recognition and tracking. It has API data integration with providers such as Amazon and eBay. It has one-click pre-alerting of packages. And I remember when we used to use Mailpac a lot more, that one-click alerting was very useful. It has here as well instant approval of prepaid MasterCard for shopping online. And if you're wondering, I'm taking all of this information from the annual report, right? So, oh, sorry, I got a little distracted there. Yeah, so that's their core business, right? Next, there's the online shopping marketplace called Mailpac Marketplace. This is where they now seek to provide those customers who don't have, who are maybe not ready to order online directly or for themselves, and this allows them an opportunity to order through Mailpac. So it provides an app for smart devices which allows the consumer to shop on various leading international stores. It offers a plugin for web browsers which allows the consumer to shop. It provides pre-alert services in terms of getting the details to customs that they would need to clear it. It offers direct purchase through Aeropost's own e-store, and I'd mentioned that earlier. And this is actually one of their fastest growing lines of business, right? So this is one of them that you want to be aware of and watch closely. Next we have Mailpac Local. Now this is the service that last year we saw being integrated with places such as PriceSmart and Hilo and the stationery center. Now this is one of the lines of business that I'm interested in seeing built out, because I think there's opportunity here to merge with multiple other companies, such as maybe other places that provides groceries. Stationery center would provide like stationery office furniture, etc., there may be opportunities for them to add more businesses of that type. So this is one of those interesting lines of business that for me provides a great opportunity to grow for them. Then they have, Mailpac, ocean freight and brokerage. This is what it states. It's ocean freight, so this is more focusing on the commercial side of business. I think this is an excellent idea for them to not just benefit from consumer shipping, but commercial shipping as well, which probably offers higher margin, but maybe not the same scale, but a good line of business to note as well. And in terms of just some of the highlights from the annual report, the link to the report, by the way, is in the description of this video. Just click on the link that's provided there to the JSC's website, and I'll show you soon how to access the annual report. All right, so just some key things that I wanted to note here. Some things that stood out to me was the expansion of their Mailpac local platform for island-wide fulfillment. That's the third one from the bottom of the list. I like as well when I saw the development of the Mailpac MasterCard, and I also like the introduction of the pickup locker. So we're going to talk about that a little later, but that was something that they were testing late last year or earlier this year, and I believe they've confirmed about 5 or so locations that have these lockers functioning now. So these are good developments. These are good things to be aware of, and it speaks to the company's commitment to keep growing and developing their business. So we're going to look at just some highlights, as I said, from the annual report. So these are the numbers for 2020. We're going to look at the 6 months for 2021 soon. But we saw where they were able to just do excellent for the last two quarters here, 476 million and 518 respectively. And what you're seeing in yellow is, let me actually zoom into that. What you're seeing in yellow is the last Q, because they would have listed in 2019. We don't have the data starts there, right? So that's our starting point, and this is how they would have done last year. Next, we're looking at gross profit by quarter. So what we saw, Q4 is clearly a good quarter for them, which is why I think where we are right now, I'm very excited to see I'm excited to see the Q3 report, because if you see here again, Q3 was their best quarter last year. Now, it could be that it was the height of the pandemic, who knows? But if they're able to do similarly to what they did last year, I think they're shaping up to have an even better year than they did last year. But this is their gross profit for the year. This is their operating expenses by a quarter. Now, this is something that I was interested in watching as well, because of course, the more expenses, the less profit. So you have to see how companies are managing their expenses. So we're going to be looking at this for the last 6 months financials as well. So I'm not going to spend much time on this one here. And this would be net income by quarter. And we see where the best in terms of income was Q3, and then following that was Q4. So since we're at the point in the year now where the Q3 report is going to be due soon, I'm really, really anxious to see how they do at that point. So the next thing that I have here on the screen is the top 10 shareholder. Now, from time to time, I like to look at this because I like to see who these shareholders are. From time to time, I like to look at the different reports and say, which company has changed their positions, which companies are buying more, which companies are selling. So the top 5 has remained relatively the same, but the number 6 here, who was First Rock, when I checked the 6-month report, they had sold all of their 29 million shares, so they're no longer in the top 10, right? So I thought that was interesting to note. So I don't know if that, well, depending on when they sold, you might see that reflected on the first ROC report. And the last thing we're going to look at from the annual report is just this graph showing the price history. Now we're going to dig into this a little bit more soon, but I thought that I would share this here because in December of 2019, if you are a Mailpac shareholder, the stock price would be 132, and at December 2020, 1 year later, you would have seen 100% gain because the price would be 278. So I know coming into the start of this year, we saw Mailpac do really, really well. And I'm actually going to be sharing my thoughts on what I think will happen this year as well. So that would be it for that. Let me switch now. So right now we're going to look at, let me actually close one of that. Okay. Just give me 1 sec. All right. So we're looking at now the financials for 6 months, 2020, the full year for 2020, and then the 6 months that were released for June 30th, right? So I thought it would be interesting to just put everything together, seeing how they compare. So you usually compare 6 months to 6 months and not necessarily 6 months to the full year, but the full year, I think side by side gives you an idea as to how far. I see a question from Blue Collar. Who came into the top 10 when First ROC exit? We'll confirm that soon. I'll share the list. All right, so let's look at the balance sheet. So what we saw for the 6 months is that their assets would have grown, well, they're non-current, grown from 285 to 354. And we saw where their total assets actually would have decreased by about 20 million from 616 to 591. And I mean, these typically what we're looking for here are just what those subtle changes are. So cash and cash balances would have been less. That went from 276 to 191. Now that usually means there's some investment, right? Because cash is to be used to either pay dividends or to invest in the company. So though that's about an 80 million decrease, I mean, we look through the cash flow statement to see where that cash would have gone. We saw trade and other receivables go down. We didn't see any short-term investment for the 6 months or any other asset. And the right of use assets went from 9 million to 35 million for the same time last year. In terms of equity, that remained the same, but the retained earnings went from 276 for the 6 months last year to 227. And they would have ended the year at 304, but I believe they paid 2 dividend payments this year, if I'm not mistaken, since this date. We are seeing where liabilities, the lease liabilities would have went up, certainly from where it was at the end of the year. And the deferred tax liability, 502,000, that's within the same range. Lease liabilities went from 2 million to 25. Trade and other payables went from 47 to 59. And the loan payable is gone. That liability is no longer there. And due to related companies went from 7 million at the end of the year to 67,000. So that's good to see that liability go down. Their current liabilities went up by about, it went up by 20 million, all right? We just calculated some ratios here to just assess their liquidity. So halfway through last year, 5 times assets in terms of liability. And this year they're at 2.8. Now, I mean, this still means that they're able to take care of their short-term liabilities if needed. They have enough cash to do it, but you definitely want to see this number, I would say, probably not drop too much. So if for the 9 months report, this drops further, I mean, I guess you just want to see where that cash is going, or what factors would have led to that that decreasing. Then we look at solvency ratio, that's debt to equity, that went from 0.13 to 0.2. So it's good to track that as well to see the solvency of the company. Next, we have the income statement. So this is where we're going to spend some time. We like to see revenues being better than they were last year. So that's an increase worth noting. Gross profit would have gone from 343 to 437 for the same time. What I noted though were admin and general expenses would have gone up. And I believe they would have alluded to that in the report in terms of staff costs and administrative costs going up. Selling and promotion costs, they would have invested in promoting some of their services. So that cost going up is normal. And operating profit would have gone from 199 to 225. Net profit is what we really want to look at though. For 6 months, last year it was 189. For 6 months this year is 198. So that's definitely a good sign. And we have just some margins here to just kind of see how they've been trending. So gross profit would have went from 47 to 49%. So your gross profit is simply this first 3 lines here: revenue, cost of sales, give you gross profit. So we're just assessing that gross profit over the revenue to get this margin amount. Operating margin, we see that's gone from 27 to 28 to 25. So we want to see it not get too low. Net profit is 22%. Now this is something that, based on the short history of the company, we haven't really, it's not like we have 3-4 years of data to see how it's been trending. So really, since I started out with this amount, I guess we want to just see it stay within a certain range. This number will fluctuate with each quarter, but you just want to ensure that this number, remains competitive in terms of what other competitors within the industry are able to do. Right, and we did the EPS calculation, and so for those who don't know, EPS is essentially earnings per share. What you're trying to do is understand how much money is being made per share, right? So they have 2.5 billion shares outstanding. So for each share, they've made 8 cents in earnings for the first 6 months of this year. All right, last, we're looking at the cash flow statement. So I'm really going to be focusing on the last 6 months, right? Because this is too far back, I think, to take too much information from. So we're looking for just how cash is being used. So let me see anything that would have stood out here to me. Don't think there's anything that stood out for there. In terms of investing activities, we saw acquisition of property, plant, and equipment, and they would have alluded to expansion projects. So that's likely where those funds went. We saw that dividends were paid. So 274 million. We saw where loans were repaid to related companies, and would have seen that liability that was on the balance sheet go down. And we have lease liabilities go from 3 million. Well, it was 11 at the end of the year, and now it's down to 7. And in terms of cash at the end of the period, 191 million. All right. So we typically just like to see where the money is going, how it's being spent, where it's being invested. And that kind of just gives us an idea of how the company is managing their cash flow. All right. So the only thing that I'll probably state here in terms of the dividends, we want to see how the company is balancing the payment of dividends as opposed to investing in infrastructure and growth. So I mean, so far so good. They've been able to undertake all the projects that they need without taking on any other forms of debt apart from the issuance of shares. So we want to, I mean, if you're a dividend investor, you love to see the dividends. If you're interested in capital gains, you want to see the company utilize cash in a way that can lead to greater revenues and profits. All right. So we're going to look at the price history, and I'm going to get to the questions at the end. So if you have any questions, just feel free to say them in the comments and I'll get to them as soon as I can. All right. But we're trying to keep this review under an hour. All right. So we're at the Jamaica Stock Exchange website. I'm going to post the link in the chat so you can get there. So what we're doing is looking at the information relating to Mailpac, and let me just zoom in here. All right, so at the start of the year, the price would have been $2.81, right? That's the start of this year. We saw it have a run up all the way, I believe, to 443 is the highest price would have seen here for the 52-week range. So what we're anticipating, right? What we would have seen is, so we're at about October here. So last year at this point, they were at $2. And then as I said, the 9-month financials would have come out somewhere around November. And what we saw was just sentiment increasing at that point. And then when the end of year came out, like it's just it skyrocketed from there. It went from $2 to $4.43, right? So that would have been quite that would have been a 100% increase. And so it's very interesting to me to see how they do for the 9-month financials, because that will tell us whether or not they're likely to outperform what they did last year. So that is what I'm waiting for, that 9-month report to let me know how they're going to be shaping up. So I think if it's a very good report, we're likely to see some movement from where it's been, right? So after it went to that 443 earlier this year, it's traded somewhere between 330 and 385. Well, we see here 398. So it hasn't really broken $4 since it went to that high early February. So I believe it ended today at, let me see, the last traded price would have been 385. So if that report is a good one, we're likely to see it push past $4 again. All right, so I'm just going to go through some of these areas for you to get familiar. Usually we look at performance to see just a summary of earnings and information for previous quarters. So this is a good place. Just come and see at a high level the performance of the company. We're not going to spend much time there. Corporate actions is speaking to dividends that would have been paid. So we saw where they paid a dividend in July and October last year, and they paid 2 dividends this year as well. So if you are a dividend investor, you might want to look at Mailpac. I think their dividends are, I think, one of the best in the market in terms of dividend yield. Latest news. I like to just glance here to see what's happening. So you may see manager sold 100,000, sold 73,000. So I look to see how many shares are being sold and how many shares are being bought. So we saw about 173,000 sold, but 2 million purchased, right? That's a good sign. You want to see managers purchasing shares in the companies that they're working with. That's a bullish move for me. So I typically just like to look at the last year worth of information, see how things are shaping up. Quarterly financials, we would have looked at the 6 months. This is the one that we looked at, so that's how you access it. And the annual report, the one that we took the highlights from, is on this page. So that's it here. So the link that I would have posted in the description is the link to this page. And then from here on the right, you can access all the other information that you need to see. All right. So from here, just some other pieces of information that I wanted to share with you. So this is a VMIL stock report that was released on October 5th. So what I use this report to do, and I'm scrolling fast because I need to be on the last page. What I do with this report is I look to see how companies are performing in relation to those in the same industry. All right, so VMIL would have published this. Now, one thing to note is that there are times when you'll see differing information between brokerages. And let me give you an example. So we see here the PE for Mailpac is listed here as 2141. I'm going to go to the Mayberry trade sheet. So the Mayberry trade sheet showing the PE for Mailpac as 20.64. Now you may not say that's a big deal, but just bear in mind that there are times when this sort of information can just vary ever so slightly. So you want to be mindful of not taking it as a precise number. There are times when you may want to calculate it yourself because the number may vary by broker, right? So I think I would have seen maybe an NCB report that had the PE at 20 as well, and they were projecting it to let me see. No, I don't remember. Never mind. But you just want to see what the average would be, how that company is in relation to the average. So based on VMIL's report, the average is 2178 and they're 2141, so they would be within the average. Hopefully this is not too hard for you to see. All right, but Mailpac is the 5th one. Let me just zoom in here, make it a little easier for you to see. So Mailpac would be this one, right? So this is a PE, earnings per share would have seen that for the end of last year, book value per share and price to book. So that's the information for Mailpac here. And you may want to look at other companies in the same industry to determine, which ones may be more attractive for you, which ones may meet your criteria a little bit better, right? So I thought that would be useful to look at. And let me zoom into this because I thought I would just share something here as well. So what we're seeing from Mayberry's site, so Mayberry is saying that they have the PE at 20.64 and they're projecting the PE to be 19.89, which means they're projecting that they will have better earnings, and so the PE would actually go down, which would make them a more attractive company because they would be lower than that industry average. All right, just something for you to bear in mind. So the next thing that we're going to do is just look at some news stories. So All I did is went to Google, type in Mailpac, click on news, and then I'm just scrolling through some of the reports that I'm seeing here. And this helps me to understand just some of the news impacting the company, seeing if there's any risk, if there's anything that I maybe need to know. And you kind of use this information to determine how it will likely impact the company down the line. All right. So I have the first one here, first article here that was speaking about shipment delays. And this was released in March. So this would have been about 7 months ago. But this is the kind of story that I think, depending on how this issue plays out, can have an ongoing impact on the industry. So what this is doing is speaking about companies having to spend thousands and thousands of dollars due to cargo flight delays, which would have resulted in missed deadlines, or them having to discount packages to customers. And I just wanted to go specifically to what the Mailpac CEO said. Let me see. But this is definitely an article that you should check out, right? Because if it is that they have to spend money to cover delays or offer refunds or anything like that, that is going to impact their revenues, which is going to impact their ultimately their net profits. All right, so that was an interesting article. I'm going to actually link the articles in the description as well. The next one here is speaking about them partnering with gas stations and pharmacies for pickup lockers. So the idea behind a pickup locker is to offer locations for customers to pick up their goods that they would have offered. So this was something that they were testing, and it was released on September 7th that they've been able to confirm a few of these partnerships. That's something that they would have mentioned in their annual report, and now this is showing you that they would have executed on it. This article in September is speaking to them being in expansion mode. That was a part of their focus for their annual report, and we're seeing it come to pass here. And this is, again, speaking to the same locker service that would have been in the previous article. I'm going through them quickly because, of course, we can't read them here all within the hour. So I'm going to link them all for you to check out. But as I said, if you just Google Mailpac, you'll see some of these articles as well. All right, so this is speaking to them exceeding their profit forecast for the end of 2020. So you already know that. We don't need to spend much time there. And this, don't believe I read this one, so I can't comment on it. And this is speaking to just their performance at the end of Q2, which would have gone through already. All right. So I believe that is it for everything that I wanted to go through. No, I said I would actually touch on, let me share one more screen for you guys. Just bear with me one quick second. And as I said, I'm going to get to those comments very soon. So I just wanted to read the overview from the 6-month financials. There's something there that I thought was interesting to note. So let me just show you the document that I'm reading from. So the 6-month financials, again, the link to this one is provided. So what I do when I go through the report, I'm highlighting things in green are things that I think are good to note. Things that are in red are things that are concerning or that I want to keep a close eye on, right? So that's just speaking to their operating expenses. This growth in expenses represents an increase in staff costs, advertising costs, and store operating expenses. Spoke about that from the financials that we looked at. The interesting thing here is, though, it said within the Outlook section that they anticipate a potential reduction in consumer dependency on online shopping. And the reason behind this, they're saying, is that with more and more persons being vaccinated, with more and more persons, maybe being more comfortable with traveling, they're not going to have the same dependency on shipping through Mailpac. Now, how much this will impact them, I'm not sure. The fact that they've listed it in their outlook makes me want to look at it closely. So I'm looking at that revenue number. We saw where Q3 last year was their best quarter. So that means Q3 this year will tell us a whole lot about the company, all right, and how they will perform for the rest of the year. In terms of the rest of this report, would have gone through it already, but somebody was asking the change in the top 10 shareholder. So let me just find that. So I believe, I think the difference would have been this Baljet. I think that would have been the difference. I think all the other companies were there already, but this is a difference in terms of taking First Rock's place. All right. All right. So that was a lot of information to go through. Hopefully it was helpful for you. In terms of my personal views on Mailpac now, I think it's the right company at the right time, meaning the pandemic would have provided some great opportunities for them to expand their business. It's interesting that they also noted that 2020 was an extraordinary year for them, meaning they would have exceeded their own projections, and the pandemic would have had a great deal to do with that. My concern with that is, as things get more normal, then persons may seek alternatives. Now, we saw where, the first 6 months for this year were very good. They would have still exceeded what they did last year. And that can be attributed to them, constantly expanding their business. So those are things you want to say, right? It's not, they would have taken advantage of COVID, and now it's for them to continue to expand, continue to form new lines of businesses, new products, new services. I think, though, because of the type of company, they have a great opportunity. We saw where they would have done in 2013. They chose to acquire one of their largest competition, which was Global Couriers. So they were able to just absorb all of their customers, and Global's revenues now became theirs. What I was thinking when I thought about that, ShipMe, I believe, is one of their biggest competitors now. If they were to announce through that they're going to acquire ShipMe or something, or some other company that is equally attractive, that is a great opportunity for them, I think. And the fact that they're expanding their different services, so each of the different services that we went through is an opportunity for them to grow. So we saw the Mailpac marketplace being their largest growing business. I trust that they'll continue to expand that. So all signs are pointing to them being a good company long term. What that means, if you're a short-term investor, it's really for you to, as a short-term investor, you're probably only focused on the 9 months to the end of the year. That's the next few months are your best opportunity, I think, if it is you're looking for short-term gain. It's been trading steadily, as I said, between $3.30 and $4. It traded at $3.85 today. So if it is that you're considering to take a position for a short-term trade, if you think the 9 month is going to be good, that's a potential opportunity for you. If you're a long-term investor, I think all signs are pointing to this being a good company long-term. You do want to see how the expenses are shaping up, because we've seen other companies have, shipping and logistic challenges. We've seen increasing costs in terms of expenses related to shipping. So we don't know how that's going to impact their pricing to customers and how that's going to impact their revenue or customer retention. They have great opportunity for expansion and growth within the Caribbean. So, personally, I think it's a good company. It's definitely one worth shortlisting if it is that you're looking for companies to invest, and then you can do your own analysis as to see whether or not it's worth investing in. All right. So hopefully that was helpful. Let me see if I can answer some of these questions here. It's good to be back, guys. By the way, it's been 7 weeks since we've gone live, so good to see everyone here. All right, so I've answered blue collar already. Or really didn't miss anything. Well, depending on the time you joined, I don't know what you would have missed. Oh, you missed the first half. So yeah, dividend yield of 3.1. Yeah, that's very, very attractive. And so blue collar is saying he doesn't like to see when a young company like Mailpac pays out dividends. Are there no growth project to invest in? So that's what I was saying as well, right? So it really depends. Let me actually put that comment on screen. I need to change that font. So it really depends on how you look at it, right? I think it could be good that out the gate they're showing their willingness to give returns to investors early, and they're able to grow despite paying so much in dividends, right? So that's one way to look at it. And as I said, they would have been growing despite paying out so much in dividends, right? Yeah, exactly. So Krishna is saying it right. They have a lot of projects, right? So remember that screen I showed with all of the projects. They're constantly working to grow their business, to provide more value. So that to me are all good things. All right. So as I said, I'm going to share all the links to the articles that I would have found, but you can just go to Google, type Mailpac, go to news, and you'll see all of the information there. And yeah, so I want to thank you guys for joining me here today. Hopefully you enjoyed this review. Please leave the video a like. If it's your first time here, please remember to subscribe. And we should be doing our next stock review on Fesco. A lot of persons have been waiting for that one, so it should be an interesting one as well. Yeah, and that's it for this one. I hope to see you in the next one.